and families learn a little bit more on the principles of money, but we go a little bit further than that. We also have everything from a simple life insurance product to college funding, retirement planning, corporate retirement, 401ks, cash balance accounts, simple SEPs, all that kind of stuff.
Yeah, and I'm gonna pick folks. I'll try and put myself in your shoes, and this will be very conversational and it will not be boring. Emilio, and for the folks on the line, people on the line, we're in college exam season. I have 2 children, so maybe that's worthy of a future webinar, but totally separate from this one. So I'll let you get back to your introduction.
Okay, well, that was pretty much it. Originally from Mexico, but I've been living in the U.S. for 21 years, 16 or so in the Dallas area.
Nice.
Yeah.
So go ahead.
Nothing too exciting.
Yeah, I think you're exaggerating a little, Emilio. I mean, you lived in was it South Florida, Miami region?
Yeah, so through my life, I've lived in Mexico, Guadalajara, Miami, Atlanta, and Dallas.
Okay, so I would say, I don't know Atlanta, but the other places you mentioned are certainly not boring. But anyway, well, let's jump into the topic. I don't want our audience to get bored of me rambling on. Go ahead, I'm going to launch into it. If you could perhaps start at the most basic level.
Yeah, so let me move out because there is a bit of noise here.
I'm not hearing it on my end, but thank you for that.
Oh, I do. Oh, it's better for you. All right. Sorry for if anyone gets dizzy from me walking around with the computer.
Good special effects.
We're better here. Okay. So basically, ERC, for anyone that doesn't know, it's the Employee Retention Credit. And it comes from, obviously, from pandemic, from COVID. And years ago, years ago, seems like long ago, but when it all started, the key points were that if you applied for either the PPP, the EIDL, or the ERC, but if you had applied for any of the first 2, you were automatically disqualified from the ERC. So initially, there was not a lot of noise, if you will, for ERC, because if we all remember, PPP was send me your numbers in a napkin and you'll get the money, pretty much. So everyone went through that route. And since that disqualified you from the ERC.
I'm going to jump in, Emilio, and warn the folks. That's certainly the common perception about PPP. I'm not an expert on these particular tax subjects, though I'm a CPA. I think it is fair to say the writing, and this is why maybe some of you are joining today, because this ERC has been in the news, and especially the business news, small business, middle market news, a lot lately. The days of writing things on a napkin are over. That was to some degree accepted, in my professional view, given the urgency of saving and helping small businesses, and it's now being sorted out. Those of us that manage it well are having absolutely no issues. Some that took a bit too perhaps of a sloppy napkin approach are having issues. So what we have Emilio here today is to be totally upfront and blunt and direct about what we're seeing in the news about ERC. There are strict guidelines to follow, which Emilio will address. However, they are not overly complicated for an expert. But that being said, the days of the napkin approach are over, and anyone that says it's that easy, I'd be cautious.
Yeah, and that's why I wanted to have this conversation with you, because it's not complicated by any means, but there are a lot of scams going on out there nowadays. I mean, I'm self-employed. I don't have a W-2, and I still get 2 to 3 calls a week, and they swear that I qualify, and they want to, and it just kind of flusters me because there's a lot of people taking advantage of it. There's a lot of money out there. But anyway, back to the roots of it. about a year and a half ago, I believe it was, President Biden said, well, hold on. The PPP and the EIDL was government money that came out to you to help you survive through the pandemic. The ERC is actually a tax refund, or it's a refund on the payroll that you had during that time period. So this actually comes from the IRS, not from the federal government. So that's where the administration said, you know what, that's different issues. One should not have to disqualify the other. So they basically changed it and allowed companies to qualify for both of them, or sometimes all three of them. So that's where the big change came. And since that happened pretty much about 2 years after all the other stuff had, and the focus of EIDL and PPP was gone, and they changed the rule on this one, well, it got the spotlight. And that's where a lot of different CPAs and attorneys started processing this for companies. But then there were mom and pop companies and individuals that said, oh, this is not so hard. I just need to provide 2 pieces of document and we're good to go. And I'll just charge you 30, 40% of whatever you get back. So
Yes, sir.
it was sold as a free money to you. You don't even know this money exists. I'll get you something back and you pay me 40%. And there were companies, attorneys and such that were charging 40, 50% of whatever was quote unquote recovered from the IRS. And that's why you hear a lot of it in the news right now, and they've gotten stricter on it because they were pre-qualifying people that had no place or reason to be applying for this credit. There are companies, and there's a lot of different companies that have a legitimate reason on why they're getting this credit back. But there's also, as we know, when things are out there and there's quote unquote free money, there's a lot of people that are going to take advantage of it and not do it in the right way. And by the time the IRS gets back to you, that company or person is long gone. So that's one of the little things that we wanted to talk about, because they have gone and not redefined, but gone into more detail of things that qualify or not, because people were just taking, again, the napkin approach, and it's like, yeah, everyone qualifies. Well, not really. For instance, CPAs, attorneys, and such, is very hard for them to actually qualify for that. Anything that's a service that doesn't have a face-to-face or a supply chain is going to be hard to qualify. So I saw that you had the slide up there. I don't know if you want to share it or if you want me to share it.
Okay, bear with me, folks, 1 sec.
So this is just a simple example of the different triggers that can help a company qualify. Now, again, it's triggers and it's not a guarantee, but there's a couple of reasons why you could qualify. The first one, and the most obvious one, is if you had a reduction of sales. Now, the reduction of sales is actually a drastic reduction of sales. And what they're doing is they're comparing 2019 to 2020 and 2019 to 2021. So they're going to do it by quarters. And there's 6 quarters that qualify. It's Q2, 3, and 4 of 2020 and Q1, 2, and 3 of 2021 that could qualify. Each one has a different amount, but in total, if you qualify for all of them, the credit is up to $26,000 per employee. If the employee didn't have enough income to pay 26 grand, then you won't get 26 grand, right? You didn't pay that much in taxes and income on salary during those 6 quarters, then you're not going to get the whole thing.
Again, the business is getting back only, the business cannot get back more than what it paid in. There's a credit, right?
Right. And if you can see here on the chart, on 2020 compared to 2019, you you should have dropped at least 50% in sales and revenue per quarter, comparing Q2 of 2020 to Q2 of 2019. And if you dropped 50% or more, then you qualify. And for 2019 to 2021, it's got to be 20%. So again, it has to be something that was a really drastic drop. The other thing that a lot of this scam, I don't want to call them scammers or whatever, but those companies going out there, one of the other things that disqualifies you is if there's any owner that owns 51% or more, that person and their direct family, if employed, that person and direct family cannot apply for the ERC.
That's a great.
So if I owe 51% and my wife and my 2 kids work with me and 3 more employees, I can qualify for the 3 employees, no one else.
Got it.
Okay. So that's one of the biggest triggers, because people are, again, they approach me, I'm sole proprietor, I'm 100%. I'm disqualified right there off the bat. Second, it's only W-2 employees. I'd be disqualified off the bat as well. If a company uses what they call a POE, it's POE or PO. Basically, they use a third party to manage their workforce, their HR. They're actually subleasing those employees from the other company, so they're not actually your employees, even though you're paying for everything. They're actually the other company's employees, so you're also disqualified.
That's a really good point. Thank you.
Yeah, I've had a couple of companies that came to me and they're like, "Hey, I have this many employees." I'm like, "Yeah, but you didn't really have them. You used ADP, for instance. So, yeah, you're paying for them, but ADP is the one that's actually have the W-2 relationship, and ADP is disqualified as well." The other one that's really weird, and don't ask me why, for 2020, you can only qualify up to 100 employees. If you have 101, you're out. But on 2021, you qualify up to 500 employees.
Yeah, that is.
Why the difference?
That's the federal government.
I don't understand still. Yeah.
Yeah.
So if you have 250 employees, discard 2020, but you can still apply for 2021. The other reasons why you could apply, and this, like for instance, restaurants are pretty much almost, I wouldn't say grandfathered, but because of social distancing, they had issues with social distancing and reduced hours. They were forced to close or forced to reduce the number of tables they had. That's a reduction by mandate. That triggers and that qualifies. So most restaurants, and I've had several that actually sold more because it was carry out. But they still kept the employees, but they didn't have enough space, or they couldn't use their whole space, and they were mandated to close, and reduction in tables and all that. They qualify, and they can apply for the whole thing.
That's good news.
Yeah. The other one, and this is the one that's gotten a little bit trickier, I would say, and it's not, I don't think the IRS is really gonna push the envelope too much, but again, they're trying to derail people from just applying willy-nilly. So if you have any distribution delays or suspensions or supply chain suspensions, that triggers and you qualify. Now, part of it is they came out a couple of weeks ago saying it's got to be a supply chain disruption that came from a government mandate. In other words, your supplier had a government mandate that prohibited him to supply to you. Not just that I can't find it and I got to pay more. That's gray area. If you're importing something from China, for instance, we all know we had, I don't know, it was like 150, 200 ships in the ocean in California out there just sitting for a couple of months, a few months, because they couldn't disembark. Well, that's a mandated supply chain issue. That can also work for you. And then the last one that says suspended on-site work or client meetings, that is very, very, very tricky and hard to actually justify, because again, with Zoom and what we're doing today, one could argue that you could have it the same way as if you were at the same building. So that one, I think, if and
Emilio,
when someone gets
so,
an audit or a review, that's
okay,
going to be really hard to prove.
okay, so
Yes.
that's a stop sign to say, hey, look at this well. If that's your sole, like your primary justification for applying. Again, don't not apply, but go through the work with your expert in this, for example, with you, Emilio. But yes, certainly take it seriously. We have a question from Catherine. Thank you for joining us, Catherine. If you put in the chat where you're from, meaning what part of the country or world, happy to share it. Catherine says a great question. What if the restaurant was closed in 2022 after COVID? Can they still apply for ERC?
Yes, they can. If they still had the triggering issues, they can.
Okay,
That
so
can be one. And someone that was a new company, a startup, they didn't have decrease in sales, but if it's a startup and has any of the other issues, they can definitely apply as well.
okay,
So remember, it's not that you have to get 2 or 3 of the triggers. It's one trigger can qualify.
right. So that's what I was alluding to as well with your prior warning, to be very precise and clear that if your main reason for applying is the weakest, or let's say most challenged reason by the government, do the extra work with your subject matter expert, your service provider, to make sure it's will be perceived as valid, right? Because we can have things that are very valid in our business, but sometimes convincing whatever authority that takes some work. The other question, and thank you for that, Emilio. The other
Yeah.
question was, would you elaborate more on the PEO ADP situation?
Yeah, sure. So a lot of people don't know about this, but as a corporation, there are companies out there that say, you know what, I don't want to have an HR department. I don't want to be liable. I'm just going to sublease or hire ADP, and they can manage the whole HR department. They'll hire and fire and run the 401k and everything for me. It's kind of, it's called a co-employment kind of deal. So you actually have, and I know this because I worked for a company that was like that. And whenever I had an HR question, they were like, yeah, call ADP. I'm like, why? Any lawsuit, any settlements, any workforce challenges, accidents, anything like that, the company says, yeah, you're not my employee, you're ADP's employee.
Yeah,
So I just pay ADP a fee, so they handle you. You're actually their employee, but you work for me.
yeah, so I mean, and we can do a separate webinar on PEO and these kind of structures. Happy to do a webinar on again, those of you in the audience.
Yeah,
we touch on whether even if it's tertiarily on the call. Happy to get it. I can get a subject matter expert, Emilio.
I was going to say you're going to need another one.
Again, yeah, to be clear, Emilio's not a PEO guy, but we know we work with these people to serve our clients. So happy to do that. So for many of you folks may be familiar with Robert Half. It's actually a similar kind, not exactly the same, but similar kind of model, in that to some degree you're outsourcing your HR function and your payroll. So whether it's Robert Half or ADP, and there's a lot of other big, really professional players in the space, they're providing you that service, and they're literally, they are the employer of record. So they charge a fee for that, right? And maybe 20-30%. But yeah, that's the model. So Amelia was using ADP offers more services than you probably are aware of, including we had ADP on a call earlier this year, and they'll be back later this year. But yeah, so maybe a more common example
Yeah,
is but pardon me.
ADP came to mind because I had a client. They're a big furniture store and distribution center. They have like 20 different stores, and the corporate side is a PEO. The stores themselves are not. So
Oh, that's
the
fascinating.
owner of the whole thing was not happy because she couldn't apply, but the franchisees of the stores all got money.
That is a
So
great study. Great case study.
yeah, they called me like, and that's the case again. They've been getting calls from people saying, no, you do qualify. So they've called me. Fortunately, they trust me enough that they called me before going ahead with other companies to ask me if that's legit or not. I'm like, no, don't even get into that, because one thing you don't want is the IRS on your back.
Yeah,
So
and that's fairly I think all of us are more, more familiar with it being the other way around, where the people actually doing the actual day-to-day service provision and work, in plain English, are with the Robert Half or whomever. But this case is interesting that the executive team was with the PEO. So very interesting case study.
yeah.
And
So
nice
yes, as the question is, yeah, the owner cannot claim PEO, cannot claim ERC if they're using a PEO.
Catherine, while you were chatting, you just answered her question, Emilio. So owner cannot claim ERC if they join PEO. Then ADP could claim anything. No, maybe we're going a little too fast. I tend to speak New York
Well,
City, but I mean, let me just. You already mentioned ADP for other reasons does not qualify. So in that case, no one gets it, in plain English.
no, right. Well, just think about that this way. ADP gets disqualified because they got more than 500 employees. So right off the bat, they're gone. So the one thing you got to remember also is, once you go through this process, and if you do get something back, it does normally take about 16 to 20 weeks to get the money from for the reimbursement. They will reimburse by quarters, and it's funny because let's say that for Q3 you qualified for 75 grand. Just let's throw a number. You'll actually get the check for 80 something, because the IRS will pay you the interest on that money because you paid it in 2020. It's 2023, so there's 3 years of interest. They'll actually credit you back with interest. Now, the only problem, don't go spending all that in all one place, but the problem with that is, obviously, once you get a credit, you're going to have to do an adjustment to your payroll for 2020, because you had a payroll of 150. Well, they just gave you 75 back. It's a little bit less than that.
Okay,
and when
so
you do the adjustment, you're also going to have to pay interest.
Catherine has another question, but I want to wrap up. This is important and speaks directly to my clients as well. And then Catherine will come back to your additional question. So in that case, okay, who do you send your client to talk to? Does that happen through your organization? Do they do that internally? Let's say they're using a payroll provider. I'll just use ADP again because we all know who they are. Do they call ADP? To whom do they need to say, I just received an ERC payment of 75,000 plus interest. Who needs to fix my accounting? Who needs to fix my payroll records?
Oh, whoever does your taxes.
Okay.
It's not necessarily a payroll, it's a tax issue, because now, remember, you had a deduction for, let's say, 100 grand. They just gave you a credit. So your deduction for payroll should have been, and your expenses should have been lower.
So whether you're a bigger company and have an accounting or tax accounting department, or your accounting team does both, book and tax, or more of you are more likely to have outsourced accounting and tax, or we have a CPA. Yeah, they will need to know, and they'll need to evaluate for you. That's probably beyond the scope of this call, but yeah, that's important to communicate. Not only with your treasury, even if maybe for many of us we are the treasury, but yeah, very good point. So we have some more questions here. Let me
Mhm.
so I'm gonna go through these questions. If I miss one, I'm gonna scroll back through the chat. So just bear with me, folks. Questions are great. So Sylvia, great to have you here, Sylvia. Sylvia has a question. If my spouse also works in the company, can my spouse claim ERC? So
Again,
spouse also works in the
remember, it depends on the ownership.
So the
If
question,
you own the company, then if you own more than 51%, you and your family are disqualified.
so that's 51% in total. So for example, if my spouse and I own 51%, if pardon me, if I own 25% and my spouse owns 30%, then we're disqualified, right?
That's where it gets a little bit grayish, and we would have to go and check with the next level. In theory, is one person owns 51% or more.
Again,
So if you
more,
have three
okay. These are great
people
questions.
at 33, then in theory you do qualify.
Yeah, these are great questions because again, everybody, we're dealing with ultimately the government and the IRS. So never presume, there's no stupid questions, and most things in the tax world really are not driven by common sense. We've already touched on several aspects already today where this beneficial program is not based on common sense. So that's worthy of that's a great question. Don't assume anything. So we've got another question. We're doing great on time. This is from Catherine. Catherine says a tutor business doesn't have an online tutor before COVID, and they make more profit during COVID since they went online. Is this tutor business? Bear with me, I gotta scroll down. Is this tutor business? I'm having a little trouble seeing it, folks. Bear with me. Okay. Catherine, bear with me. It's a little hard to see on my screen. A tutor business, I'll start over, everybody. A tutor business does not have an online tutor before COVID. They make more profit during COVID because they move their business online. Could they be qualified?
Yes, maybe. It would be kind of like a restaurant. Restaurants went to carry out, but they had to close down the restaurant. So the restaurant side, if they had, the theory is if they had kept the restaurant open, plus the carry out, they could have sold even more. So on the tutoring, depending on if there was a school, a physical space that was shut down, mandated to shut down, then yes, maybe. How many employees, how many tutors? Again, the physical space, because in this one you don't have supply chain. The sales went up, so your only trigger would be if there was a mandate to close.
Continuing with the tutor example, and this is actually, tutoring has become a really modern business, right? Virtual, et cetera, et cetera. So what if the tutoring business did not have an office, but was sending the tutor by car to visit clients? Right. That's also
It's questionable.
right? I pay the tutor.
Yeah, there was a time that you couldn't do it, but my fear on that one is when the time comes, if you do get audited, proving that point is going to be hard. Now, and this is not advice, but if you're risky and you want to take the risk and say, yeah, maybe I won't never get audited, okay. But I'm always kind of the conservative side and say, well, if I do get a question, do I have the a way to prove
Yeah,
what I'm
absolutely.
claiming.
Absolutely. That's the key thing here. And I'm also fairly conservative when it comes to, well, any kind of financial, particularly tax advice. But to your point, what I would suggest is this. If I were that business that had a tutor that I sent to make site visits to clients, whether to their homes, at their offices, where, or a coffee shop, where have you. What government wants to see, governments, because it's global, it's not just US, documentation. If you have something that in your policies and procedures, that's how we do business. If your marketing has been out there for years and saying this is how we serve you, in my experience, I have to say, the Small Business Administration do try to be fair. If you have documentation, you can say, hey, this was my business model. This is how I paid this W-2 teacher. They can, I mean, any documentation, and think of documentation broadly. So documentation may mean marketing you did on Facebook or Instagram, or documentation may be emails between your clients and potential clients. So think something you can actually make a PDF of and present to first to your who's helping you, whether in this case it'd be Emilio or someone else, and say, hey, please, here's what but I have to substantiate this. And then they'll be able to help you based on their experience with the government, if it's enough or not. My philosophy is, don't give up because it requires a bit more work if you really believe you're entitled to it, because this is actually was created to help small businesses like that. So a bit more work, but I make the effort. We've got another question, Emilio. This is great. Let me, this one is, I think this is Sylvia again, it just shows me an S. My company was affected by the county shelter-in-place government order. So I'll repeat that. A company was affected by the county shelter-in-place government order, but they did not have to completely shut down. Well, that's good news. It says, can I use this to qualify for ERC? I think we need to also remember, and Amelia, you can elaborate if I'm wrong, but technically it's the business entity that's qualifying, because it's the entity that's paying the W-2 employee. So you may be the owner of a pretty big, there's plenty of businesses that have hundreds of thousands of employees that are owned by one person. But technically, again, it's the business that's getting the ERC. So I understand it's ultimately may be the same in some cases. My sales didn't go down though during this COVID period. What might help if remind, is this, which business was this? This is not the tutoring. I'll hand it off to you, Amelia, while I go back and read through the.
So to me, the key word in there is completely shut down, because the qualification is complete or partial shutdown. So one of the things that is easy if you want to check, if you go to my ercspecialist.pro, on the top right, there's a button that says get started. It's going to have a questionnaire. Once you go through that questionnaire, it's going to tell you if, in the basic first level approach kind of deal, it's going to tell you if you can qualify or not. From there, there's more questions and documentations and whatnot, but that's the first trigger. I would say go in there, take the questionnaire. It might be 10-15 minutes, depending on, again, if you want to put in the exact sales to see if you qualify or not. But it's a 10-15 minute questionnaire, and it'll tell you at the end, yes, you might qualify for X amount, or no, you don't qualify. And then from there, obviously, there's more information that's needed. There's you're going to need basically the payroll ledgers and all the 941 forms, and they have to match exactly.
Well,
and after that, you can see.
You've got another issue. Sorry, folks, but they should match exactly.
Yes, if you'd be surprised. I've got a few clients that we had to go back and forth
Emilio,
several times because they didn't match.
nothing surprises me anymore, I must tell you.
Hey,
But really, for most businesses, you want to, this is getting beyond the scope of the call again, but we're touching on a lot of things that are important for business owners and professionals. They really should match for a lot of reasons, and you'd want to start being more part of that your annual reconciliation process with your financial team.
yeah.
But
And if anyone needs any help, just do info@myercspecialist.pro, and they'll send that to me, and I can get on a call with you guys. And if
wants to reach
needed,
out,
we can get an expert, because I'm not the 100% expert. Again, I'm a financial advisor. This is something I stumbled on with a couple of my clients, and I just got into it and started learning more and helping more clients.
Here's Emilio, here's how I describe you as when it comes to ERC. You're a subject matter expert, but you clearly you provide other services. There are people that Emilio works with, as he said above him, that all they do all day long is ERC. Most of you will not need. We had some great questions here, so some of you may need that kind of help, and Emilio would work with you and them on it. Others hopefully have a more straightforward case. What was the email again? I'll put it in the chat, and then I'll get to the next question.
Info@myercspecialist.
Okay. Dot what? .com?
.pro.
Oh, .pro. Okay.
The same as the website, just info at.
.pro. And if anyone wants Emilio's direct contact info, you can just shoot me an email after this. Happy to connect you to. Let me get to that question. This is great, folks. We're already at almost 12:40. There was a question about a salon. I don't know if it was a nail salon or hair salon. I have to scroll a bit. Bear with me, folks. Yeah, okay. Stylist service salon. So hair salon. Thank you. And I only see you as P phone. So whomever you are, if you'd like to shoot your name in there, happy to address you by your name. So yeah, great question. So someone joining us by phone today, and so for those of you joining and only via audio, we will make the video available within typically 2 days after the webinar, when it's allowed for when our subject matter experts organization allow it, which in this case they do. So if you wanted to see anything we've shown, you can watch it again. But back to the question from where'd it go?
Yeah, from the hair salon.
So
Patricia, again, we go back to the ownership and number of employees and all that stuff, but all those places were shut down for a time period. You might not qualify for all 6 quarters because you were not mandated to close for the 6 quarters, but you might qualify for a couple of them. If you were mandated to reduce your space and only use every other chair, for instance, then yes, you might be able to qualify. But again, we go into the number of employees, number of W-2s, who's the ownership, and all that stuff. So the questionnaire will address all of that.
Yeah, my understanding is if it's that kind of a business, Patricia, I would go through the effort, definitely do the questionnaire online. If it's not, if anything's complicated or not obvious about it, just reach out to Emilio, because again, this program was put in place by the government exactly to help those kind of businesses that we're having the questions about. Restaurants, tutoring face-to-face, any kind of salon.
Yeah, so
yeah,
just an example. I mean, I've got clients of mine for my other business that I've helped through this process. I've got some that qualified for $28,000, all the way to I think the largest one qualified for just over $2 million. So it's everything in between.
Yeah, and again, even if it's only what the minimum, let's just say it ends up being only 25,000. If I have a small business of one restaurant,
Yeah.
one service, one salon, 25,000 is real money.
And,
That's,
and I've even seen, as I said, some that don't qualify. And they're like, well, at least now you know. So when you get all the 20,000 phone calls trying to sell you something,
you can defend
you know
yourself.
not to go into it. Yep.
Yeah. Another point I'm going to make here, which is certainly not our goal. The goal of everyone on this call is to serve our clients and or our employers, depending on whether you're here as a business owner or a professional. Going through the process sort of helps lets you learn a little bit about how the government thinks. And I know that's not our prime function because the government has a unique way of thinking.
So you just said an oxymoron there. Government and thinks.
Said it, not me. But we hope we're through COVID vaccines. We hope we're through it. I think what we have learned, without a doubt, these last couple of years is unforeseeable, unpredictable, or certainly, I will say, in my opinion, unexpected things can happen. That there would be an epidemic wasn't unpredictable. That it would be that epidemic at that time certainly was not foreseen. So we all hope there's we don't have anything as crazy as COVID anytime soon, preferably never. But if there is some kind of, and for example, what's going on, unfortunately, in Hawaii, the government may do something similar, a program just for that city or that state. So this sort of shows you with disasters how government thinks. So if you go through again, people, I'm a positive guy. I'm hoping we never have anything on the scale of either COVID or Hawaii again, wherever you are. And if you're in Hawaii, my thoughts go out to you. But hey, if you're in North Texas, we get tornadoes here on a regular basis. We had a massive windstorm. We had the Arctic apocalypse. So just in my short time in North Texas, we've had a couple of natural disasters. And if you were directly affected by them, the government may provide, and it can also be state governments, not necessarily only federal. But what I'm trying to say is, don't self-exclude. If you think you might have a chance, go ahead and go through the steps. And you may learn a little about your business in that process. That's ultimately what I'm trying to say. Thank you, Emilio, and thank you. So I'll let you continue. We can get great questions. Keep them coming.
Well, I pretty much covered everything I was going to cover. So,
all right, let me just quickly look at make sure I didn't miss any questions. Great questions. Every time we do a webinar, we get different questions. This is, I think, the third time we're doing this webinar, and we'll keep doing them periodically while ERC is valid. We want to make sure that all businesses.
Yeah, so I'll just cover that one since you mentioned it.
Yeah.
So claims for 2020 end on tax day 2024, and claims for 2021 end on tax day 2025. So if you do think you qualify, you want to start working sooner than later, because 2020 will be over in about 5 months or thereabouts, I guess. No, 6, 7, thereabouts.
Yeah. Soon, early next year. Yeah.
Mm-hmm.
Yeah, that's a good point. So as you can see here on this call, we're not telling you to panic and run out and do it today. I also get a lot of emails, the same as Emilio, saying that I'm qualified, and I just laugh at them. I'm like, yeah, no, I know I don't qualify.
I've actually answered a couple of them just to have fun.
Yeah, well, why not, right? Why not? If they want to be your punching bag, go ahead. The thing I want to, the point I'm demonstrating here is that someone's telling you to panic. I wouldn't be lazy. I'd be proactive about it, but this is not something to panic about. This is something for your benefit. It is a time-consuming process, because even once you get to the government, it goes at government speed. So you don't leave it till the last month, because we all know how it works. It's just like taxes. everyone will be trying to get it in. The government will be totally overwhelmed, and that's not to their discredit or a criticism. Businesses should work to get their taxes and other things in on time, or even in my preference is early, but certainly not late. So there's going to be a mad rush. You're going to see a mad rush starting February next year. We're only in August. You know, if you have some time now, if your summer's a little slower, just get it done now. And if not, as soon as you get back from Labor Day, I'm telling everybody, look at it in September. You're gonna be busy enough with other stuff after that. But yeah, not a panic situation, but again, it's a chance to get back money you paid for, for your business, and that helps you have a healthier business. That's awesome. Yep. So are there any more questions? Because if not, we'll probably wrap it up here a couple minutes early so people can get back to their business work or what they have next today. Hey, great questions, everyone. Thank you so much. Again, we'll just end with a quick who are we? Because we started promptly at 12. So I'm Andrew, Middle Market Advisory, based in Dallas, Texas. I've lived in New York City, Hiroshima, Japan, Mexico City, and now here in Dallas. I'm a certified public accountant. I've got an MBA in finance and international business. Love working with private middle market and small business companies. Everything, throw anything at me. I go a lot deeper than just accounting and tax, but that's in my skill set. My primary function is as a chief financial officer. So all of these questions, all of these things like ERC directly are things I need to be conscious of and know. If I don't manage them directly, know who's the subject matter expert, in this case, Emilio. So Emilio, would just like to finish by, and again, thank you, everybody. Just again, remind them a little bit. Some people joined a little later. Who you are and
Sure.
what you do.
Emilio Garcia. I'm with WealthWave, the How Money Works company. And we are basically a financial services firm, but we base our services in education. We actually have a book out there called How Money Works, Stop Being a Sucker. We have it in English and Spanish, and they just released the women version. So if anyone's interested, let me know. I'll get you a copy of it. And if you need to get in touch with me,
it's a great
what's
book.
that?
It's a great book, everyone. And Emilio's a friend of mine, but that's not why I'm saying this. It's a great book to share with your teenage kids. I have children, with your with younger professionals, with people in college.
Well, I didn't write it, so
it's almost like a comic book. It's really well done. It doesn't oversimplify it. It just but gets it. It's a really good level. It's really well done. I've got to say,
yeah. And if you want to learn more, just go to doyouknowhowmoneyworks.com. That's my website. You can track me down in there.
So
and again, if anyone wants, doyouknowhowmoneyworks.com.
Okay.
You can buy the book in Amazon for like $16-18, or if you want one, I got a few of them. I can get you a copy.
Yeah, and to all of you on the call, and Emilio, maybe that's in the future webinar we can do in Spanish, on the Spanish version of that. And also we have a good amount of ladies on this call, women on this call. So my impression from the questions is you're pretty savvy. But we're also happy to do webinars for native Spanish speakers or people serving Hispanic and Latino markets. And we're also happy to do webinars for women, targeted for women professionals and business owners. We'll have a lot more interesting webinars coming up next 12 months. So will everyone get on with their day? Hey, thank you so much for joining us. Thank you for the questions. We hope you found this valuable. I'm speaking too fast. Hope you found this valuable and interesting. And listen, keep watching us. Sign up for our Eventbrite page. Shoot me an email. We're here to help you grow your businesses and yeah, make this a great year.
And if you're in Dallas, let's go to your events, your happy hours.
So Market Advisory is often the sponsor of the Latin America Professionals event, which moves around DFW. We have 2 events this month for Latin American professionals, and you don't need to speak Spanish or Portuguese. You don't need to be anything or do anything. You just have to have an interest and desire to meet cosmopolitan professionals and entrepreneurs and business owners, though there will be many people there who've done business in Latin America or of that descent from various nations in the region. We meet monthly. This month, actually, we're having two events. One is already sold out, but there's a wait list. And I can provide the information. I'll send the information to those of you who registered, so you have it. Thank you for mentioning that, Emilio. It's a fun cosmopolitan event. Yep. Well, that's great. Hey, thank you, everybody, and anything we can do to help in the future, you let us know. Ciao. Bye now. Hey, thank you. Thank you. I see the thank you message there. Thank you, everybody. Ciao. Bye now. Good afternoon. Bye.